think we're going to go ahead and get started. Again, thank you for everyone this morning for attending our webinar on understanding the new 2020 W-4. My name is Brandon Garner. I am the sales manager here at Superior Trucking Payroll Service. Quick housekeeping procedures here. All of your lines have been muted for the duration of the webinar. Please enter any questions that you may have in the question box shown here. You can slide the GoToWebinar window closed by clicking the double arrow or the orange arrow. And do not click the black X because that will exit the webinar. Quick note about Superior Trucking Payroll Service. We're a full service payroll administrator that specializes in the trucking industry. Our services are all inclusive, things like your direct deposit, garnishment calculations, remittance, all that's baked into our costs. We also include in our cost the W-2s and any 1099s. And just so you're aware, we can actually do both. So if you have a combination of both, we can do those. And then we also have a driver recruiting applicant tracking system that we'd love to show you sometime. Bottom line, we get trucking and we understand it. Little note about our speaker today. Mike Ritzma is going to be doing the presentation. He is the founder of Superior Trucking Payroll Service, 20 years of experience in payroll administration, 10 years trucking finance experience. He was the former CFO of a 75 truck fleet brokerage and is a member of many transportation associations. And so with that, I'm going to go ahead and hand it over to Mike.
Thank you, Brandon. Today's webinar is about the new IRS form W-4 for the year 2020. And here's what we're going to talk about today. Why did the IRS change the W-4? And what exactly did they change? And how employees complete the form, where we're going to spend most of our time. How these changes affect the tax that gets withheld from their checks. Things you should and specifically should not tell your drivers and other employees about the new form. And what are you going to do when somebody will not fill it out? And then any questions and answers, or hopefully answers, but questions that you have, you can type those questions in the question box, as Brandon said, anytime, and we'll get to them at the end. My goal is to talk for about 20 minutes and leave 10 minutes for question and answer. If I see the question queue is filling up quickly, then we'll probably spend more time on that. As we'll see, this is a different world this year for the W-4 form. So let's start with, why did the IRS change the W-4? I gave you their answer just for fun. It's a long way of saying make it more accurate. I don't know why they need so many words to say that, but that's why government manuals are thousands of pages thick. But basically, the new form, well, I think it started because with the tax law change a couple of years ago that was significant, personal exemptions went away. And so since they were going to have to change the W-4 anyway, they decided to get with the times, as opposed to the 1950s when they were single earner households. Now we have multiple earner households, both the spouses work, or even if just one of the people works, they have multiple jobs, and the W-4 never properly accounted for any of that. And that's where the other income comes in the multiple jobs. The tax credits is that the child tax credit doubled from $1,000 a year to $2,000 a year for children under 17 years old. And so that's a more significant impact on how much should be withheld. And so this new W-4 should account for all of these things and make your taxes at the end of the year not a huge sticker shock surprise that you owe a bunch of money or get a bunch back. What changes did they make? Well, I gave you a picture of the new W-4 form. For those of you who don't remember, and I imagine most of you remember, but the W-4 used to be name, address, social security number, single or married, and number of exemptions. And then there was extra withholding, which almost nobody, some people did, but not many. What they've done now is they've broken it out. As you can see, there's 5 steps here, and I know it's hard to see on a lot of screens. We're going to go through each of these steps as their own page as far as how the employee fills it out. So don't worry about this. We're also going to have links for all these things at the end, so you don't have to worry about that either. But I just wanted you to see that the form is significantly different in whole than it used to be, and I wanted you to see the whole form, so when I break it up, you're going to kind of have an idea where we are. How do the employees complete the form? This is the meat of this thing. There are 5 steps. Step 5 is signature, so that one we're really not even going to cover, but we're going to kind of do them in order here. Step 1 is very similar to what step 1 used to be, which is name, address, social security number. The only thing that's changed is, let me get my pen here, is now we have this box for head of household that we didn't have before. It used to be just married or single, and they had married but at the higher single rate, but that for tax was single. So in this part, that's all that's changed. So that's pretty manageable. I think we can all get through that. Step 2 is where things get complicated. Step 2 is for people with multiple jobs within the husband and wife or spouse or however you want to say it. One of the important things is this step is completely optional. Step 1 and step 5, which is the name, address, social security number, and filing status, and step 5 is the signature. Those are the only ones that are required. You can skip 2, 3, and 4, and many people, that will be the correct way to fill out the form. But for those people who are not, if their spouse works or they have multiple jobs or even Uber or something like that, they're going to want to go through this. And so you've got to go through a couple of different things here. You got to do one of these 3 things. This is a really good website, and I'm going to give you this link at the end too, to help someone fill out their W-4 correctly, and it'll walk you through all the steps. It's all automated. The IRS is kind of getting with the times here. I'm going to skip the second one for a second, and I'm going to go down to the third one because it's easier. If there are only 2 jobs and you both make about the same amount of money, if you both have reasonably close to the same wage, say within $10,000, you just check that box and you're done. So the A and C are pretty easy for you. It's B that's the tricky one. The multiple jobs worksheet on page 3. So we're going to go through that next. That's for people with more than one job or a couple that has more than one job between them, and the wages aren't really close to the same. So they give you a couple options here. There's the 2-job option and the 3-job option. The 3-job option is just another step into the 2-job option. So we're just going to really focus on this guy here, this 2-job option. What you want to do is they want you to compare the 2 jobs for the wage and how much you get paid from each job, or how much you expect to be paid in the next year for each job. And it's going to tell you how much you would have shorted your tax based on the withholding tables. So I'm going to show you that in a minute, and then I'm going to come back to this slide. So for example, if one of you makes, let's say, because you're listening to me, you're the higher wage earner, and you're going to make $75,000 next year, and your spouse or your second job, I guess if you're married and you have the second job, your second job pays $35,000. You need to go to the higher paying job here and go down to $70,000, and the lower pay, or 70 to 79, and the lower paying job here, and go where those intersect, and that's 4440. That's the number you're going to need to put back on that form that we're going to go back to. One thing I want to point out is that the IRS did accommodate those who don't know which job is the higher paying job and think that the other job's higher. If you went to this one and this one, you're going to get the same 4440. So that's kind of nice. Can't mess that up. So I'm going to go back to that other screen here. And you would put in the example, and forgive my bad writing with a mouse, but I just want to kind of give you a live example. You'd put 4,400 there. For 3 jobs, you do this step twice using different values of the 3 jobs, but this is going to be the bulk of people are going to be the 2-job one. And so then you'd write it down here to 4,400. And then the number of pays per year, because they're trying to get to how much tax you need taken out each paycheck. If you're weekly, then you're going to put 52 there. Most trucking companies are weekly. If not, you've got a driver retention issue that we can talk about, but 52. So then you would do 4,400 divided by 52, and for the purpose of rounding off to the nearest dollar, you'll put that amount here, and that's $85. And that's how much extra has to come out of that employee's check every week, in addition to the withholding tables. Now, before anybody goes, $85 a week more in tax, don't compare that to what you were withheld this year, because the tax rates are all changing and the tax withholding tables are all changing. So don't freak out thinking you're paying an extra $4,400 in. You paid it in last year anyway. So this is just a more accurate way of doing it. But hopefully this kind of makes sense for the multiple jobs worksheet. And then what you're going to do is when we get to step 4, you're going to put this number in 4C. I'm going to circle that now because we're going to come back here. But we're going to have $85 that we put in there. Again, if, for example, if I make $75,000 a year and my wife makes $35,000, we need to have an extra $85 withheld. You only do this on one W-4, which means that I would do this, but my wife wouldn't have to. If I had 2 jobs, I would only do it on one of the jobs and not the other. Otherwise, you're going to be over withheld, and while you'll get a refund, you're basically lending the government $4,000 for free. I don't think any of us want to do that. So hopefully this makes sense. If you have questions, again, type them in the question box and we'll talk about it. We can go through it again if I'm not being clear, and sometimes I know that I rush through some of these things. Again, here's that chart. This is right out of the IRS. This is actually in the instructions of the W-4 form where I showed you the intersections of those. Okay, now we've got step 3, which is accounting for the child tax credit and the other dependent care, or the other dependent credit. If you have, I have well, next year will be a 17-year-old and a 10-year-old. So I would have one under 17 and I'd have one other dependent. And so you multiply those. I put the ones there, but you really multiply them by the dollar amount, but we can all do math of 1 times 2,000 and 1 times 500. So I would put 2,500 here. Again, forgive my bad telestrating. That one's pretty straightforward. And the nice thing is this does something that the old W-4 never did, which was account for things like child tax credit. And the child tax credit's been on the books for a while, even at $1,000. And so it's nice that they're accounting for that now that they never did before. For step 4, they have, if you have other income, like interest income and things like that, they list out those things there. You'd put that amount in here. And then remember that extra withholding, I'm going to skip B for a minute. I'm going to go to C, that extra withholding. That was the $85 that we had. Remember we had to put it in box 4C? That goes right here. Again, I'm just going straight down the form I showed you at first. So I know I'm blowing it up so you can see it, hopefully. But that part's straightforward. And then we've got the deductions. Most people use the standard deduction, but not everybody does. And so if you're not going to use a standard deduction, or if you've got student loan payments and things like that, we're going to use this deductions amount to actually reduce the amount withheld. I'm going to show you that. There's a worksheet for that too, deductions worksheet. They do like their worksheets, don't they? And so what you would do here is put your deductions in. If you were gonna, let's make up a number here. Let's say you thought you'd have 27,000 in itemized deductions, and you're married filing jointly, so that's 24,800, and you subtract the 2 out. I'm not gonna write the 24,800 in there. And you get 2,200 there. And then you've got $1,500 in student loans. Does that make sense? Student loans, deductible IRAs, any of that stuff. Those are traditionally called deductions before AGI for those people who know tax things. All that kind of stuff goes in there. So you'd add that together and you get 3,700. And then that's going to go back on 4B, which is this one right here, 3,700. And then we had nothing for other income. You would put interest income and things in there, but I'm just going to make that 0. I think that's so straightforward that we don't need to worry about it. And so that is how they fill out the form. And I tried to use that they'd have all these things. A lot of people aren't going to have dependents. A lot of people aren't going to have deductions. A lot of people aren't going to have extra withholding if their spouse makes the same amount of money as they do, or their spouse doesn't work. They're not going to have to do any of this part. but we all need to be aware of it. Okay, so I showed you that form. Now, so they fill out these forms, and what do we do with it? How does this affect the tax withheld? Well, one of the things that they did was there used to be two tax brackets. Like I said, you were either single, I guess married at a higher single rate, but that's still the single tax bracket, or married, and that was all you had, and the number of exemptions. Now they have the single or married filing separately as one category, married filing jointly as another, and they added head of household, like I showed you in step one, where you could check that box for head of household now. In addition to that, so that's three. And then they have this part, remember in step two, where if you and your spouse, or if you have two jobs between the two of you and they both have about the same amount of wage, you check this box and you're done. Well, what that does is that changes your withholding tables, because it basically splits your standard deduction in half. It does a few other things, but that's really the guts of it, is that it splits that standard deduction. And so now we have single and check that box, and single and not check that box. And we have married and check that box, and married and not, and head of household checking it, and head of household not. So we have 6 different tax brackets. We got 6 tax charts that we've got to deal with. Yeah, I think I got it. Yeah, here's a picture of them. These are from the IRS. Circular E has not yet been distributed, so these are considered to be official because the IRS told us so, but at the same time, it's the IRS and they could change them. And so like you can see married here, and that's not checking the box, and married and is checked. And so you got single and head of household. Just as an aside, one of the interesting things to me is that the married filing jointly with the box not checked starts at 11.9, but with the box checked, it starts at 12.4. But then you keep going, and then these brackets these numbers are higher than these numbers. So it looks like if you made $12,000 and you didn't check that box, you'd pay tax. You'd pay tax on the first one, but not on the second. But as you go up, you pay more tax if the box is checked, which makes sense because you're trying to split your standard deduction. For those of you who don't want to mess with this stuff, just you can nod along, it's okay. But I thought it was pretty interesting, at least. And so now we have, like I said, we have 6 different rates that we have to deal with, which makes tax computation just a little bit more complicated, but yeah, that's what we do. So we're going to be able to handle it. But ultimately, like all these numbers are going to be different and smaller than they were this year because of the add back of the taxes. And if I'm going to answer a question that I don't think anybody's asked yet, if you're single in one job, or you're married filing jointly in one job, really nothing's going to change. This is more to account for all the other things that go on in a lot of people's lives. Let's see here. Let's talk about what you should tell I use drivers. It really applies to all employees, but the drivers are going to be the ones that probably have the most questions, since they're remote more and they don't sit in front of a computer all day. And there's some pretty important things here. You want to make them aware of the form. You want to send them to the IRS links for help. Those links I'm going to provide for you in a couple slides. You want to encourage them to talk to their tax advisor about it. Let their tax advisor tell them how to fill it out. That's what they get paid for. Some of the things you don't want to do, unless you're licensed and your company blesses it, you don't want to give tax advice. And you don't want to tell them what to put in the form. And the reason you don't want to do these two things is you're just bringing unnecessary liability. If you tell them to fill out the form wrong and they're going to, at the very least, they're going to be mad at you because you told them to put 0 there and you should have put 5,000 there or something like that. So there's no winning that. Between the IRS links and their tax advisor, they should be able to complete the form. But yeah, just don't give them advice. You're just going to get yourself in trouble, and you're taking on a responsibility that you shouldn't have to take on. I get that you want to be helpful, and I think that's great, and I'm sure your drivers love you for that. But I wouldn't be crazy about this. I mean, I do income taxes, and I don't really want to tell people how to fill out the form because I'm not their tax advisor. And so there's lots of resources online that they can go find it for themselves. We do have a letter for you to distribute to your employees about the new form, to kind of telling them how it's different and what they need to do a little bit. It's a boilerplate letter. My suggestion is that you distribute the letter or some letter of your own doing with new W-4s for all of your employees so that they can start to fill them out and we can start withholding properly in the first payroll of 2020, or whoever does your payroll. They can get it withheld properly. It's going to be a significant change to all of the tax engines that determine your tax calculations. And if there's someone who does have, for example, a couple of kids that are under 17, it's going to withhold basically $80 less a week. And so they might want that $80 now versus wait until the end of the year to get it. But yeah, again, with the letter, which we're happy to send to anybody who wants it, it'll help explain it, and then it'll tell them what to do. It should be going forward here. Okay, let's talk about what do we do if the driver, and I always use driver, but again, because the employees in the office, you can browbeat them into it if you need to, but if somebody says, I'm not filling out that new form, I filled out a W-4 when I started, and that's the one I'm going to live with till the day I retire. Well, the IRS provides the book answer there. You just keep withholding how you've been withholding, and you don't have to sweat it. For any employees that start in 2020 or get their first pay in 2020, they have to fill out the new form. Yeah, okay, they're supposed to fill out the new form. If they don't fill out the new form, then they're treated as single and nothing else. It's like the old single and zero. The thing with the people that don't fill out the new form is exemptions have gone away. So instead of being single and 2 or married and 4 or whatever, they're just going to be single or married. I'm waiting for final determination from the IRS. Circular E is something they put out every year with the new tax tables, which they said they gave us the tax tables, but they don't give us all the other things before that. So they may allow us to still use exemptions for the people who will not fill out new forms. So if you were single and 2, we can still do the single and 2 thing. I don't think they're going to allow it, but I'm not sure yet. And if they do, then instead of single and married, now we have another 2 ways of determining tax. Now we'll have 8, because we'll have people with exemptions and people without exemptions. Just adding another layer of fun to the process. I would really encourage the drivers and the employees, and I would encourage you to have everybody fill them out. Again, it's the goal. The goal is to make it so they don't owe at the end of the year. Those are always pleasant conversations when the employee comes to you as the human resource payroll person, owner, whatever your job is, and says, why do I owe this money? Why didn't you take out enough tax? As if their tax thing is your responsibility. This is designed specifically to eliminate that conversation, but they've got to fill out the form. Here's some useful links for you. The frequently asked questions from the IRS, that's where the IRS answers that I gave you, I took right from there. So I just copied and pasted, and I'm telling you that because I didn't just paraphrase their answer, I directly quoted them from that. There's the link for the new form. There's that irs.gov/W4 app. That's a great way for employees who aren't familiar with all of these things. It will ask them questions about their other income and their other deductions and things like that, and it will help them fill out the form. It's a great way. If you have an empty computer in your office and a driver comes in, sit them down there or tell them they can do it on their phone. And it's a really nice app to use, and it takes the responsibility off of you. And then of course, truckingpayroll.com/tips is our website. We put 1-minute trucking tips there every week through our YouTube page. It displays at that one. Interviews that we've done, all of our webinars are there. It's all free. It doesn't require an email address or some sort of goofy registration in a code or any of that kind of stuff. So we do it freely because we're here to help trucking companies, and trucking is hard, and if we can make it just one part of it a little bit easier, you can deal with the rest of it. But that's what that's there for. It's a free resource for anybody who wants to take advantage of that. Okay, questions. Brandon, I think I see one in the question queue right now. I think there's other ones coming, but can you see it?
Yeah, I see it here. The question is, if claiming single and zero and is head of household, is it better to change the head of household?
Yeah, yeah. In the old system, and I think I know where you're going. Looks like that question's from Maria. Maria, what it used to be when you were head of household, you would claim single and zero or whatever you would claim. You wouldn't. There was no head of household to claim, and that's one of the things that the IRS fixed was they know that a number of people, there's a number of single parents. Again, I don't know that the IRS had fixed this form since like the 1950s, back in the Ozzie and Harriet days. So if you know who Ozzie and Harriet are. Anyway, a lot of people claim head of household. There's a lot of single parent families. There's a lot of people taking care of other dependents now. And so what they should do is they should claim head of household. And then generally speaking, all these answers for specific things like this are always, I'm making assumptions. They would claim that probably the tax credit too, if they have one, either the other dependent or the child tax credit, depending on the age. And those things will both help to reduce their tax withheld during the year, which if they're head of household, they probably need the money sooner rather than waiting till March of next year to get their refund. They can get it through the year. Let's see here.
Excellent. We do
Yeah,
have another question. Does the amount adjust per week, or would the $85 per week be fixed, not dependent on the weekly wage?
that's a great question. That amount would be fixed. Now, it's not perfect. I'm going to give you an example of where something's going to go sideways. Let's say you didn't work for a week. Well, obviously you don't withhold that week, but then you only worked a little the next week, and the employee, I'm using an employee here, the employee also had health insurance deductions and things like that, where basically they couldn't afford the $85. It would make them have a negative check, or they had, other deductions, or they had child support or whatever, things that has to be paid first. Then you would just withhold as much as you could up to the $85, or up to $85 for that week. And generally speaking too, with a W-4, when you put that $85 a week in there, it's only on the weeks that you're paid. If you don't get paid for a week, then it's not necessarily up to your employer to make up that week unless you specifically ask them and they like you and they'll do it for you. Um, but you wouldn't necessarily get 170 the next week. If to kind of work on I'm going to kind of change it to a good trucking example here. We're in Grand Rapids, Michigan, and we have drivers going to get produce out of Los Angeles. Well, to run it even close to legal logs, you're looking at 9 days. End to end. And so if you get paid every week and you turn in your bills when you come back to the office, you're turning in bills every 9 days. Well, if you're turning in bills every 9 days, you're only going to get paid 7 weeks out of 9. So you're going to lose 2 weeks out of every 9. You're not going to get a paycheck, but you're going to get bigger paychecks the other 7. So over the course of the year, that means there's probably 11 weeks you're going to miss. So then that 4440 or whatever that number was, instead of dividing it by 52, you would know ahead of time you're only going to get paid, I forgot how many times I said, like, 10, 11, 41 times. So you would divide that 4440 by 41 and tell them to take an extra 110 or however many dollars that is. I'm doing math in my head, so feel free to correct that. But you would want to adjust it there, versus, or what you could do, actually, another way to do it would be if your spouse has a job that they get paid every week, or get paid on a regular interval, do all this stuff on their side and have them have extra withheld. Then it's going to be a more consistent $85, because they get paid on a regular interval if they're work at a retail or a factory or something where it's not trucking and trying to go to Los Angeles and back. But yeah, on the administrative side, for you to process the payroll for your employee, the $85 would be fixed, but it's not something where you have to put yourself in the hole to make it there. You can only pay what they have. Let's see here. So I hope that answers your question. If you have if I'm not being clear, if I'm not understanding the question, feel free to follow up with me on that. So let's see here.
Do you got time for one more?
Yeah, absolutely.
Okay. Um, if you are single, living alone, are you still able to file as head of household since you are the one paying all the bills?
That's a great question. Head of household is has what's they have to have what's called a qualifying dependent. It's actually a 1040 question, but it's good that you asked that because people have to know how they're supposed to file to fill out the W-4 correctly. Head of household requires what's called a qualifying dependent. There are all kinds of great resources on what that is. Think basically a minor child is the easiest way, and you provide more than half of their support. And I believe, and I'm going to skip back a bunch of slides here if I can. We'll see if I can do this. I want to go back to the step one of the form, and I want to show you how they define it for you. And I want to use their words so I don't misspeak on this. Oh, we're almost there. All right, here's right here. Check qualifying individual. That's what they say. Check only if you're unmarried and pay more than half the cost of keeping up a home for yourself and a qualifying individual. There will be definition of qualifying individual probably in that W-4 app. If not, any tax anybody can tell you, there's rules, and I don't want to go through all the rules now, but basically if you're putting up somebody who qualifies, which is generally one of your kids and sometimes a parent, you'll be able to check how to household. I hope that answers your question. If not, feel free to follow up with me. Anybody else? We're out of time, but if there's one more urgent one, I'll take it. Do we have any more, Brandon, or is that probably about it?
I think that is about it. Yeah, that looks to be about it.
Awesome. I know this form will take a little getting used to, like everything, but trucking companies deal with changing DOT laws and hours of service laws about every 6 months. So this will be nothing for you guys. We'll help you with it. We're here. It is complicated, and it's not in your wheelhouse necessarily, as like all the tax engines and things like that. But if anybody has any questions later, feel free to reach out to us. We'll email you. I will email everybody the slides. My email and Brandon's email are both on the last slide, and so we're happy to help however we can. And so everybody, thank you for attending the webinar today. We're gonna wish you all a Merry Christmas and Happy New Year, and hope that 2020 is a great year for you and your trucking company. So thanks a lot. Have a great day.
Yes, thank you, everyone. Have a great day.